Morning, everyone. This is Brad Matheny. Today is the 31st of December. It is officially the end of 2024. We are probably going to have a very interesting day today. I think that sentimentally, the markets themselves may attempt to rally a bit. So we're already looking at a fairly strong rally in the Nasdaq. It looks like a moderately strong rally in the SPY, SPX, and we still have an hour and a half to go before the markets really open. So we are going to be looking at very possibly a nice little move to the upside. We're looking at a topping pattern today on the SPY cycle patterns. We are in accumulation on the short-term indicator, still bearish on the long-term indicator. I kind of highlighted these other charts the other day. Let me see if I can find them in here. The reason why, yeah, this one and the other two. Even though we've seen massive unwinding of global debt, we're still in this bottoming section, meaning that we don't have any massive topping pattern, which would be indicative like this up in this area. And remember, these topping patterns, the way they work is they essentially mark an exhaustion point. Same thing with the bottoming patterns; they mark an exhaustion point. And at that point, what we do is let me expand this a little bit and come in here. What we do is we mark these as critical support and resistance levels. So, for example, this topping pattern here indicated an exhaustion point. So, what we would do is we would draw a little line that's supposed to be a horizontal line. And if we get above that level, we continue to move higher. If we get below the lows of that level, then we would move downward. Same thing here. We got an exhaustion point here. We would mark the highs and the lows, and we would essentially say, okay, we get above this, we're in an uptrend. We get below this, we're in a downtrend. Same thing here. We mark the highs and the lows. We get above it, we're in an uptrend. We get below it, we're in a downtrend. So here we have the same type of scenario: highs and lows. Get below it, stay below it, we're in a downtrend. Get above it, stay above it, we're in an uptrend. Same thing here. We got these highs and lows. We've got these as the COVID lows right before. Below it, we stay in a downtrend. Above it, we stay in an uptrend. Same thing is taking place back over here. Here's our highs and lows. Essentially, we're in this solid uptrend, and we are likely to continue in this solid uptrend. Okay, now we come over here and take a look at the next one, which is US dollar strength as well as Fed keeping rates higher for longer will create a predatory US economy in place for the next 2 to 3 years, putting pressure on global markets and global debt markets. The Fed has unwound close to 100 and call it $130 trillion out of the global markets just by raising rates over the last couple of years. The S&P is still in a rally mode. Gold, I believe, will skyrocket through 2025, possibly targeting 3,900, maybe 4,300. And of course, crude oil is stalling and should be weakening into 2025 as the economy stalls a bit in early 2025. But again, where we're at in the US markets is we have seen this massive unwinding of global debt. And I believe that's what's happening over the last couple of days and weeks. You can see this expansion upward, which is really a warning sign that we're getting into kind of a depreciationary, recessionary type of market move. But we're doing so in an upward SPY trend. So, what does this mean? It means that we're moving into um, call it a stagflation type of environment where the SPY is continuing to drive bullish trending higher. And why is that in a in a recessionary type of market? Well, because there's no other place to go. There's no other appropriate investment environment throughout the world. Europe, Canada, China, Japan, all of these, when you look at the biggest economies on the planet and you determine, hey, where would be the alternate? If the US is not the best place to put our money, the US dollar, the US economy, the US stock market, where would be the next best place? And is that comparable to what's going on in the US? And my opinion, this is again my opinion, you can argue with me, is that there is no other place like the US. There is no place that's going to give us an opportunity like this to be able to have US dollar dominance, to have the type of rebounding economy that we have, to have the strength of the US Fed and the US consumer, US credit markets. There's just no other place on the planet right now. Back over here in 2008, people might have been able to move into China or move into Europe or move into Japan and have some sort of moderate safety. Back over here in 2018, 19, 20, as we're moving through COVID, everybody was in a lockdown mode. So it didn't make any difference. Back over here, as we're moving into this weakening trend right now, the US market is continuing to move higher. And why is that? Because the US economy right now is the most dominant economy on the planet. So, going back to our indicators here, we are likely going to be moving into a bit of consolidation. Remember, we have a holiday tomorrow through this bottoming phase. We have this topping, we have gap reversal, which we saw yesterday in accumulation, a top pattern today, a bottom pattern tomorrow, an inside pause, a blank day, and then breakaway, breakaway, breakaway. Sorry, breakaway, breakaway, rally, rally, rally. So, if I were to come over here and tell you what I see, this was an anomaly rotation event yesterday. This is a 4-hour chart. I believe we're going to be looking at a topping pattern today. So I believe we're going to be moving into, we're already up at 489, a little bit higher. I think we move into a kind of a topping pattern like this today. I hate to say it, but almost like a little Christmas tree. Let me go back down to 1 hour. Try to draw this a little better for you. I think we get into a topping formation today, which is going to be, somewhat like this, topping a bit higher. Then we move into the bottoming phase, the inside pause. So that's going to put us in an inside pause back over here, just kind of a flat day. And then we end up getting our nothing bar into an inside breakaway and rally. So once we get into our little nothing bar over here, consolidating, then we end up with a breakaway, and then a rally. And I think that's where we're going to be moving into the next phase here is going to be a fairly strong bullish recovery after this consolidation deep low. You can see I've drawn this extended flagging off of this pattern. This was my projection of not knowing this here yesterday. We could, in theory, move all of this down a little bit out to this level. And assuming this is just an anomaly event, we could hypothetically declare this up here kind of a weird anomaly up top and move us into this consolidation right before we move into the rally phase. So, what we would be looking at then, if we took a look at this pattern, we have the peak coming down to our high, you know, so 1, 2, 3, 4 down here, moving into this 5. Let's count this as the low here. 1, 2, 3, 4. So we would really be looking kind of like this. Assuming this is just a rolling high, we would be looking at kind of a 1, 2, 3, 4, 5 rotation. in my opinion, pushing up to the upside. So looking for flagging right now around 596, 594, 595 on the SPY before we get into that breakout rally. That breakout rally looks like it's going to start around the 6th, 7th, 8th and peak out around the 13th, 14th, maybe 17th, 18th, right before the inauguration. So we're going to see potentially a pretty good little rally. And that means that the QQQ should follow suit here and should likely then move into some sort of consolidation phase here up like this, consolidating and then into a rally phase, potentially flagging out like I had drawn earlier into this consolidation range and potentially across this consolidation range, giving us that A, B, C, D, E kind of rotation in price. And remember, we start a very strong rally phase right over here around the 6th, 7th, 8th. So we are going to be starting a fairly strong expansive move right over here in the 6th, 7th, 8th time frame. This is going to be potentially a very solid buy zone. If my analysis is correct. Same thing back over here on the SPY. We will be looking at a buy zone back over here. And that would really be the, first stage of a potential rally up into this 608, 606, maybe 605 area. Because remember, this is going to be a pretty good little move here. It's not going to be stupendous, but it's going to be 13, 14 points, maybe 2.5% the upside, maybe reaching new all-time highs. But still, this sets up a pretty solid buy zone, and it should be moving us past some of this low liquidity price volatility. Once we get into early January, we're going to see money come back into the market. The calendar tax year ends today, so it's not uncommon to see money flow back into the markets around the first and second week of January, particularly trying to reinvest if they pulled out, if large institutions pulled out this year. Okay, let's take a look at gold and silver. Bottoming nicely, setting up over here. This is let me see, this is daily for gold, setting up a nice little base bottom here. We have come back down here, come back over here. We have a momentum rally yesterday in bearish accumulation. We have a nothing pattern today. So I would not expect too much in terms of movement. I do believe this 21 or 2613 area is pretty strong support for gold. So I'm going to leave this here for you. And I believe this area down here, this 2930, is pretty strong support for silver. And again, I think we're going to get kind of a nothing pattern. Now, remember here, we are in this kind of flagging. So if my analysis is correct, we're going to have the A, B, C, D moving into an E, and that moves us right along the 9th, 10th of January to be into this flagging zone, this apex zone right here. That would align pretty well with what we saw back over on the SPY chart, moving into a rally pattern around the 8th, 9th, 10th, carrying into the 17th, 18th, 19th peak before the inauguration. So I think we're going to be looking at a move in gold and silver over the first couple of, let's call it somewhere between the 6th and the 9th of January. I think until then, we continue to consolidate into this range before we potentially get some sort of a breakout. And that's going to be the same thing back over here with silver. We've got that same type of range, a bit more extended, maybe carrying out to the inauguration. So remember, back over here, we've got that same type of setup, but this is right around the inauguration, whereas gold may react a bit sooner. And lastly, we'll come back over here, take a look at Bitcoin. Bitcoin rebounded off of this deep, deep low. This is the consolidation range. Like I said, let me come over here. This is 1 hour. Shrink this down, get this back into shape here so you can see it. And so does it looks good. I mean, it looks like a great rebound off of this level. And it is a nice rebound off of this level. We have broken flagging. We are in this downward sloping trend. We rejected off of this level. This could prompt this upward move here, giving us a pretty solid rally phase to the upside. We'll have to wait and see if we break this low. Oops, get rid of that. If we break this low again right here, then we're looking for Bitcoin to move down into this consolidation phase and then break down potentially lower. So we've already had that break once. We've had it roll to the downside here, but get rejected. Now we need to see what happens here moving into the end of the year and see if we get that breakdown again. It's got to break down and confirm. This is rejection, and rejection can either fail, meaning rolling back down, consolidating and breaking downward, or it will sustain itself in this area, causing a potential rally back to the upside. So let's see how this plays out. It's the end of the year. My assumption is that Bitcoin would stall back up into this resistance channel and roll back downward. So my assumption is we're gonna roll back down and reattempt this low before trying to break downward. And that is again simply because we've got this falling highs. Okay. When you get falling highs like this is an indication of a downtrend. Until we get a new higher high, we are in this downward trend, which leads me to believe that we're going to resolve to the downside. Okay. So there we go. We are looking at again the topping pattern in the SPY, and I believe we're going to be looking at a fairly interesting move today. So we're in the 490, 1 hour, spread this out. I believe we're going to be looking at potentially, trying to close this gap, moving up into the 593, 594, maybe 595 area of the SPY today. And I think it's going to be a fairly positive day overall for the markets. So we'll see how it plays out, guys. All right. Well, happy new year. Today's the day. No more 2024. Tomorrow's 2025. Let's make 2025 the best year that we can possibly have and try to make the most success possible in 2025. All right, guys. Thanks for following along. Have a safe new year and see you tomorrow.